Every corporation, regardless of whether it's going to have employees, needs to apply for something called the Employer Identification Number, or your EIN number. LLCs, if they're going to have employees, also need an EIN number. Otherwise, because an LLC is a pass-through entity and it just passes through to your personal income, you can use your Social Security number as a number for your LLC. Now, here are the typical types of taxes to expect as a small business owner. The federal and state income tax. That's going to be a percentage based on your tax bracket. You're also going to want to consider the self-employment tax. Because you don't have an employer that's withholding taxes on every paycheck, you have to pay a self-employment tax. This is a combination of Medicare and Social Security. That's 15.3%. A sales tax. If you're selling products, you need to charge a sales tax. You also want to consider payroll taxes if you have employees, capital gains tax if you sell any stock in your corporation, property tax if you own real estate, and dividends if you're a corporation and you're paying out profits to the owners. Now, dividends are a little different from a salary. If you're a sole owner, you may both have dividends, which are profits that you pay yourself from the corporation, while at the same time paying yourself a salary as the CEO of the business. Those are two separate things. Your salary will still be subject to income tax, but your dividends will be subject to a separate dividend tax. The one thing for sure is that you will be taxed. Now, estimated federal tax payments. When you're in business for yourself, again, meaning that no employer is withholding taxes, you most likely are going to have to make taxes quarterly based on your estimation of how much money you're going to make that year. So the way it works as far as the timeline and the dates is that from January 1st to March 31st, you make your estimated taxes on April 15th. For the money you earn from April 1st to May 31st, you pay your quarterly taxes on June 15th. For money that you make June 1st to August 31st, you pay the quarterly estimated tax on September 15th. And finally, from September 1st to December 31st, you pay the estimated tax on January 15th of the following year. So estimated tax is used not only to pay the income tax, but also to pay that self-employment tax that we spoke about earlier. For LLCs, you must pay an estimated tax if you expect that you're going to owe more than $1,000. For corporations, you have to pay if you expect you're going to earn more than $500. You'll also need to review Form 1040-ES or Form 1120-W for corporations to figure out your tax payments, which can be made online. Now, estimated California franchise tax. Every corporation is subject to California's franchise tax. You have to declare your estimated tax every year, and it's based on the preceding year. So when you measure it, you're measuring the net income from your sources from the preceding year. The tax is imposed in advance, essentially, for the privilege of doing business in the state for that year. The minimum tax every year that you're going to pay in advance for a corporation is $800. The declaration of the estimated taxes is made on Form 100-ES. It's going to be due on the 15th day of the 4th, 6th, 9th, and 12th month of the taxable year. As you can see, tax matters can get very complicated. So it's highly advised that you work with a tax professional to ensure that you're paying all the proper taxes in a timely manner to avoid any penalties. Finally, let's talk about some additional expenditures you're going to want to consider when you're launching your new business. Now you know that you need to file articles of organization or incorporation, that you're going to have taxes to pay, that you're going to have to invest in drafting an operating agreement or bylaws, that you're going to have to consider whether your workers are employees or independent contractors, and if you have employees, get the proper insurance and supplemental documents that you need in order to have those employees. Now, on top of these things, you're going to want to consider obtaining a permit from the Department of Business Oversight if you're going to be a corporation. Whenever you have stocks, shares, or share certificates that are being given out, you're supposed to file with the California DBO. Even if you're just filing an exemption from filing, that's still a document that needs to be filed. You also want to consider the business licenses that you need to obtain depending on your type of business. Perhaps you need permits as well. Some businesses need to obtain bonds. For example, talent management companies need to be bonded with the state of California in order to have that kind of company. You're also going to want to think about reviewing any proposed leases if you're renting out a commercial building, preparing the employment agreements, Or if you have more than one shareholder or owner, you're also going to want to think about a buy sell agreement, which is going to talk about essentially your exit strategy. What happens if an owner gets injured? What happens if an owner passes away or becomes bankrupt or chooses to voluntarily leave the company? You want an agreement to plan for these kinds of events. And finally, you're going to want some counseling regarding bank loans and other ways that you're going to be financing your company. I want to end this by talking about being careful with any advertisements that you see online about do it yourself or all inclusive services for forming a business. Oftentimes, these standardized forms are not going to reflect the specific needs of your business, and many times they're incomplete. So you will want to potentially work with a lawyer to not only help you form the entity, but also to consider alternatives to the organizational structure to make sure that you're picking the one that makes the most sense for you.
If you're watching this, you have finished the entire program. It's safe to assume that you are serious about starting your business or elevating your business. So, as a reward, I want to leave you with the 5 key traits that I have seen lead to success. Grit, which is passion mixed with persistence. Good sense, which you've proven by watching this entire program. Determination. A killer instinct, which is that hunger to succeed. And finally, self-reliance. Don't worry about what anybody else thinks. Finally, an idea from Napoleon Hill. There is a difference between wishing for a thing and being ready to receive it. Nobody is ready to receive a thing that they don't believe they can acquire. You're ready now. All you've got to do is believe.